Good evening, everybody, and welcome to another live stream by the Option School. This is your friend Pradeep Singla. So, today we'll be talking about risk management in options trading. Hopefully, my voice is audible to all of you. Please confirm if my voice is audible. And today's live stream is part of a stream we have done for NSE Academy. We are jointly conducting an Iron Condor Iron Butterfly workshop with NSE Academy on 17th and 18th. So, whatever I'm showing today, this is part of uh, a webinar conducted by us for NSE Academy. Many of you have said that okay, you're not able to join that. We said okay, let us do this for our subscribers also today, right? Thanks for confirming that voice is audible. So welcome to all of you, and all of you who are coming to this channel for the first time, please go ahead and press that subscribe button. When you are pressing that subscribe button, do not forget to press that bell icon also, so that whenever we are doing a live stream, you get a notification also. And on all working days, we are live on YouTube at 9 p.m. And all of you, our existing family members, you know what to do. You do not need to press that subscribe button. You need to press that like button. And thanks for all of you who have already done that. And rest of you, take care of that. That okay, you don't miss that like button. So welcome to all of you. Let us start, and let's. I'll this today's stream is basically in two parts. One is uh, few inputs. Most of you are pretty intelligent, you know these things, and for some of you these things can be new. Risk management in options trading, and secondly, what is that workshop which we are going to conduct. Many of you have already attended our iron condor workshop. This is on similar lines, which is jointly conducted by NSE and the option school. I will show you the timings also. This is for 2 days, our was for 1 day. Okay, many times our trading results are something like this: one step forward, two steps back. Right or wrong? Please confirm. One step forward, two steps back basically means we make profits for one or two trades, and then the next trade takes away most of the profit. Then again we take a trade, we make profit for some of the trades, and then the next trade takes away some more profit from us. Right? So many times, I'm not saying all the time, but yes, many times this happens, and one trade profitable, other trade not in profit, two three trades profitable, and fourth trade takes away uh, not only the profit of first two trades, and it also takes away part of capital also. So what is the problem? What is the problem, and why this happens basically is bad risk management. There is really bad risk management in our trades, because of which these things happen to us. And I have also experienced it so many times that okay, because of bad risk management, uh, one or two good trades are totally nullified by one bad trade. Can we use some strategies where the risk is limited or well defined, and then this leads to the need that okay, we need to use the strategies where the risk is very limited, so that even if we are making profit, let us say in 6 months, and balance 6 months we are not able to make any profit, at least we are not making any loss. With good strategies, with good risk management, what would happen? I do not make profit in the trade, but my loss also will be very limited. Hence, so that if that is the kind of strategy, I am able to avoid a big loss, and ultimately I am able to accumulate my profits also. Ultimately, it's a question of whether you are able to accumulate your profits or not. Profits will always be there, but generally what happens, if my risk management is not good, those profits really are taken away by few bad trades. So how to manage risk in options trading? Any option trade we are doing, we need to ask four questions before doing that trade. What are those four questions? Let me discuss about these questions. First question is, before taking any trade, calculate what is the maximum risk in that particular trade. I must know what is the maximum risk in this trade, whatever I am taking, because options are again leverage products. And on small amount of money, I am taking a big trade. That doesn't mean my loss is also limited. Many times my losses can be unlimited. So many times it has been found that the trader doesn't know that, okay, I'm taking this trade, what kind of risk is there in this trade, right? Let me give you an example. Suppose you are buying a call at rupees 100, so maximum risk involved is 7500. I must know before taking the trade that yes, this is the kind of risk I am taking. My maximum, I can lose 7500 rupees in this trade. And suppose I am taking a trade, I am selling a call at rupees 100, your maximum risk is unlimited. So many in our diamond membership, in our smart edge membership, so many people send us trades on daily basis on views. You see, in spite of doing a lot of discussions, in spite of having good knowledge of trades, many of the traders are still taking unhedged trades. And I don't know whether they are really aware that, okay, these kind of trades can really uh, ruin their capital in just one day, right? So we must be very clear that, okay, what is the maximum risk? My trade can have one option, my trade can have two legs, three legs, four legs, five legs. But ultimately, I need to know that, okay, if all these four, five legs are executed and tomorrow market moves here and there, what is the maximum risk I am having in this particular trade? Even for people who are not in options, even if you are into cash buying, let us say you want to buy a share which is worth 2000 rupees, and you buy even 10 shares of that. That means you have invested 20,000 rupees in the market. So what is your maximum risk? You must know that, okay, this share can maximum become zero. My maximum risk is 20,000, right? So before taking any trade, I must calculate what is the maximum risk involved in that trade. Second step, check what you can do to reduce the risk in your trade. Once I know that, okay, this is the kind of risk in my trade, can I do something to reduce the risk? Obviously, in each and every trade, there are mechanisms wherein you can reduce the risk also. For example, again, if you're buying 9900 call in rupees 100, then can you sell 10,100 call in 50, thus reducing the risk to only 50? Now from 100, you have ultimately reduced the risk by 50% if you have just taken another step in your trade. Many times, I'm really surprised traders do not know that, okay, they can do these things also. If you're selling a call of 10,000, can you buy a call of 10,100 to make it a limited risk? So there are so many options. That is why the name options is there. There are so many options which give you a handle that, okay, the risk can be reduced in that. So I will be working for reducing the risk only in case I am aware of the risk. If I am not at all aware what is the risk in the trade, how will I start thinking about what can be done to reduce the risk? Right? These are very basic things, but I think if we take care of these basic things, most of the trades will take care of themselves automatically, right? Third thing, do you have a pre-decided adjustment plan? It is not that, okay, I will do the trade and then as and when whatever market is doing accordingly, I will do something randomly. I must know that, okay, market is market. Market can really be wild in any direction. Market can go up, market can go down, market can remain sideways. So what are the impacts of movements of market on your trades? You see, what we have seen last Friday and what we have seen today, very similar. Market giving all nervous traders a big down move and then covering most of the down move. Today they were okay, they didn't close in positive, but then the way markets were going down in the morning, it was as if there is no bottom, and ultimately we saw they recovered a lot of amount from where it was. So these kind of markets can be really difficult. So we must have a pre-decided adjustment plan that okay, if this happens, I will do this. If this happens, I will do this. And if doesn't happen, what will I do? Many of the trades you must be knowing that okay, whether it is going to give me profit when market is going up, or whether it is going to give me profit when market is not moving at all. So these things a trader should be 100% clear before he takes the trade. So what will you do if market goes up by so and so points? What will you do if market goes down by so many points? So all these things we must do before entering the trade. That is a must thing, right? It's a very very basic thing, and I'm not saying that okay, you need to plan it for years. Right? All these things require just 10-15 minutes to plan your trade. And mostly in your experience also, you must have seen, whenever you have done a proper planning of the trade, the results are always much better than any random trades. I don't know how come whenever you do a random trade, market will come to know that, and it will, whatever loose end you have left in the trade, market will catch hold of you from that gate only. Am I right or wrong? If you just leave one small loose end in your trade, market will definitely catch you from that loose end only. It always happens. If we think, okay, let us do it for just few minutes, let us make some quick money, market will suddenly reverse and change its direction, and that uh, trade which we wanted for a very short period becomes a very long trade. I don't know how market comes to know about these things, right? So we need to have a pre-decided adjustment plan on each and every trade. Do you have a pre-decided exit plan also? We need to have a pre-decided exit plan also. At what profit will I close the trade? You see, stop loss everybody has heard, but many of you must not have heard about what is stop profit. I have shared in other videos also that okay, what exactly is stop profit? It has happened with me also few times early in my career that okay, there is a profit, and I'm not booking it thinking that okay, maybe another few days I will take this profit and this profit will grow. But ultimately what happened, within few minutes that profit vanished away, and I had to close the trade in loss. So you must know that okay, if I'm doing this trade, my maximum possible profit is, let us say, 10,000 rupees. As soon as I get 5,000 rupees, 6,000 rupees, I am going to exit the trade. Nobody becomes bankrupt by booking small profits. Nobody becomes bankrupt by booking small profits, right? But if I leave the profit on screen, the profit on screen is not my profit. The profit which I have booked is my profit. So always make it a habit, never ever leave any profit on the table. And what will I do? You see, there can be two exit plans. One is that okay, I will be booking my profit. Other is, what will I do if there is not sufficient profit or no profit, and these are all time bound contracts and it has time to come for expiry, but still the trade has moved in such a way that there is no profit. Then what is my rollover plan? Can I roll over my trade to next month, or can I do something else with my trade? So these things also should be very clear. So what are the four things, four questions we need to answer before taking the trade? What is the maximum risk in the trade? How can I reduce the risk? Are there ways to reduce the risk? Suppose there is a trade in which I'm not able to reduce the risk, then I will be better off if I do not take the trade. Right or wrong? What is my adjustment plan? What is my exit plan or rollover plan? Right? All these things, if they are crystal clear to you while taking the trade, before taking the trade rather, not while taking the trade, before taking the trade, here the most important word is this: before. You see, otherwise market will guide me what to do. If I have my plan, I will work on my plans. Otherwise market will tell me what to do, what not to do, and that will always be very harmful to me. Again, 90% of people lose money, 10% of people make money equivalent to what 90% lose. So ultimately it's a zero sum game, and it's very very difficult to be in those 10%. We have to be very very conservative, right? So if you ask before taking any trade, all these four questions are very clear in your mind, You go ahead, do the trade, and you will see most of the times you will be having very good results in your trades. I'm not saying that okay, all the risk has gone. If all the risk will go, there will be no profit also. But yes, definitely the quantum of risk will get drastically reduced if you do these things. Right? We still have very less number of likes, so please go ahead. That will give me a water break also. Go ahead and press the like button so that we can move forward. And I will come to now second part of the presentation today. Okay, thanks. So some of you are always waiting for me only, right? But so nice of you. Let's have a lighter atmosphere, right? Okay. What is the second part? Now, all these four things, two strategies take care of these things very, very efficiently. So my risk, what is my maximum risk, is defined. How I can reduce risk, that is also inbuilt into these two strategies. And what are the adjustment plans, that also can be created very easily. And exit plans can also be done. These two strategies, iron condor and iron butterfly, these two strategies are inherently having all these four properties of risk management. Why? Because risk reward ratio is excellent in these two strategies. Earlier, I can say before 1st June, these strategies were not so great, not so fruitful, not so rewarding, because of margins. Now, from 1st June, what has happened is these two strategies, the margins has reduced almost by 70%. Now, since these have already reduced by 70%, the risk reward, or you can say the profitability in these two strategies is now phenomenal. Only thing is we need to know how to take benefit of this. Many of you have already attended our workshop on iron condor. Many of you have attended our other workshops in which we do explain iron condor and iron butterfly. So basically, as I said, this was part of seminar we were doing for NSE. So there we wanted to talk about these two strategies. Now, what are the benefits of these? These are always hedged. These are closed strategies. So risk management in these strategies is inbuilt. Risk reward ratio is excellent. Sometimes we are seeing in iron butterfly, you are having a risk reward of 1 is to 11 also. 1 is to 10 is very common. 1 is to 9 is very common. 10 versus 90. Probability of profit is good, no stress of big loss. No, what is happening in these markets is like on Friday we have seen market opening almost around 9600, going to 95, 70, 80 levels, and then ultimately closing above 99.50. Now, in a normal strategy where I am required to take action for these fluctuations, it becomes very difficult, because market having a whipsaw moment, it will kill me when it is going down, it will kill my trade when it is reversing also. So all the adjustments whatever somebody has done on days like Friday or even days like today, they will be not at all rewarding, they will be rather giving losses to the trader. Now, when I am in a strategy where I know my loss is fixed, whatever happens to the market, whether market goes down by 1,000 points or goes up by 1,000 points, I know my loss is fixed. So what, it give me a strength to stay in the trade whatever is the movement of the market. And ultimately there is always a chance that okay, market goes up, goes down, and ultimately comes within my range only. So there is no stress of what we very popularly call the risk of ruin. That okay, if this thing happens to the market, if market goes to 9400, I'm going to lose heavily. If market going to 10,500, I'm going to lose. Nothing of that sort is there, because your risk is very defined, right? And with some sound adjustments, probability of profit can be improved to much higher extent. So if you are in a trade where your worst scenario is no loss no profit, that's a very good trade, because every time markets will not behave like that. Out of maybe next 12 months, 7 8 months, you will have a decent profit, and balance 4 months, remember, we are not going one step forward and two step backward. And balance 4 months, there will be no loss, so still you are able to accumulate the profit for those 8 months. And they're pretty easy to learn and execute, and with new margins, returns are really excellent, right? So these are the benefits of trading in iron condor and iron butterfly. Most of your experienced traders, you know that this is the kind of payoff diagram for iron condor. You see the profit ratio, profit is quite high and loss can be quite low. Yes, profit can be within a particular range only, but then you can always do adjustments and you can uh, ensure that okay, whichever way market is going, whether this side or whether this side, you can always ensure that okay, you are never in a loss. Similarly, the payoff diagram for iron butterfly is also something like this, and iron condor is slightly better because it gives you a higher range of profit butterfly, but then you can always trade in multiple butterflies to take use of these kind of strategies, right? If I show you some calculations now, for initiating these strategies we require margin in the range of 32,000 to 40,000 rupees depending upon what are the strike prices you are choosing, right? So even if we earn, let us say rupees 5, 5 into 75 means 375, right? So if I am able to make 5 rupees on, let us say 32,000 rupees, I am making 375 rupees, I am making 1% profit on my investment, right? So just to make 2% per month, I need 10 rupees. To make 3% per month, I need 15 rupees only. To make 4% per month, I need only 20 rupees. By making 20 rupees per month on a strategy like iron condor, which for 20 rupees can be pretty wide also, it can be very narrow also with some adjustments. So very, very high chance that okay, I can take 20 rupees from that trade within a month. And if I have done that consistently, that means I'm making 444% every month. And many of you have shared your experiences. You are doing 15 to 20 rupees in a week also, right? That means it is pretty big amount of profit that is now possible. So we are still not, you can say all the traders are still not fully settled with new margin regime, because from 1st June onwards market has been very bumpy, market has been going up and down like anything. So nobody is getting time to take complete picture and benefit of uh, benefits of new margins. But if you do the calculation, you will find most of the strategies will not engage 32 to 40,000 rupees, and by earning 5 rupees I am earning 1%. So if I am able to earn 5 rupees per week, that also means I can earn 4% per month. It's ultimately how quickly we settle down to new things and how quickly we are able to pick up these kind of profits, because even we, you see, we are also struggling with our previous trades which were pre new margin trades. So ultimately we are also not able to shift all our trades to this, but obviously now this 25th June expiry is coming, which is just 8-9 days from now. Once that gets settled, obviously all your previous trades are gone. So you can definitely shift to these kind of trades where it looks as if making 4-5% per month would be much easier compared to what it was before 1st June, right? And before 1st June, the margin required for these kind of trades was around 1.4 lakh, which was pretty high, and hence the whole profitability was going for a 6. Now that is why, because these kind of margins are in fact better than these kind of margins are there in Western world. That is why iron condor and iron butterfly are most widely used strategies in developed markets, right? Uh, in India, because these margins required were very high for these strategies, so they were not making any sense, because ultimately cost of money is higher in India. In India, if we say 12% a year, uh, generally traders will not be very happy with this kind of a return, because again, if we, even if we take a loan, even if we put money in bank FD, 6, 7, 8% is there easily available, right? But if you go to USA, where the fixed deposit rate is almost 0 to 1%, there if you talk about something like 12%, 13% per year, that looks very enticing for trader community in those countries, because cost of money is very low. In India, cost of money is slightly high. That is why anything up to 10% doesn't look attractive, but anything beyond 15, 16, 20% looks really attractive. But with these kind of setups, if things settle down a bit, I think 3 to 4% per month, which means 36 to 48% per year, should not be very difficult. I'm not saying nothing is easy. It's never easy to make money. But yes, if you go by these calculations, it looks If you are not at all greedy, if you are just taking care that okay, I am making 375 rupees, I have invested 32,000 rupees, 320 rupees is 1%, rest 40-50 rupees I will use for my brokerage, etc., etc. So then also I'm making 1%. Even if I can do it every week, I think the returns, accumulated returns, can be really, really excellent, right? So what is this 2 days workshop we are conducting with NSE Academy? The dates are 17th and 18th of June. I think in the chat somebody was asking this question. So timings will be 4:30 p.m. to 6:30 p.m. Mode obviously is online, and the fees is 6962. Right. Tomorrow is the last date. 16th is the last day to enroll for this workshop, and how to enroll for this workshop, I will be showing you some contact numbers. You can who should join. Basically, you can join this workshop if you know at least basics of option trading. If you doesn't know what is call, what is put, and all that stuff, then I think I will request you to go through some basic stuff. We have a basics playlist also in our videos. Even in the description of this video, we have given you a link of a playlist which runs all the basics about options, what is call, what is put, etc., etc. So you need to learn that first before going for these kind of strategies. And no technicals or charts required. Even if you don't know, even if you are illiterate like me, who doesn't know what is candlestick and what is head and shoulder and doji and all those things, then also there is no issue. We are not going to use any kind of technicals or charts in this. And all traders looking for consistent conservative income, they can join this. These are the bank account details for NSE Academy. HDFC Bank account number is given, IFSC code is also given, current account, the branch is KG Marg, New Delhi. You can take a picture of this if you are interested, or you can always see this video and you can find out that okay, these are the account details. Earlier there was iron pounder workshop. Is it similar? It will be very similar, Mr. Kamal Bansal. If you have already attended that, I don't recommend you to attend it again. It will be more or less similar. You see what happens, any uh, workshop or any webinar, if you repeat it also, then also there can be some different discussions, there can be some different points, but basic structure is same. We are almost going to use the similar slides which has already been shared with all the participants of that iron pounder workshop. So would I recommend to those people who have already attended? I will never say yes, because that is not at all required unnecessarily. For same things, why you should spend more time and energy, right? All of you who have not done that, yes, for them this can be a good learning experience. How we are going to utilize these 2 days, we are planning to utilize it in a different way. What we are trying to do is first day, 2 hours or 2 or 30 minutes, we will be giving you all the concepts. After that, we will be giving you some exercises as a homework which you need to bring the next day, and we will be discussing all those things, and finally we will be again uh, uh, doing a summarization of whatever we have learned through first day and through the exercises on second day. So the only advantage here is we have 2 days, so person can go, person can learn things first day, absorb the concepts, do those exercises, and then come back on second day, ask his questions. So hopefully we are trying to create structures which can be more and more useful for the trader on practical terms, right? And if you have done the payment, if you're joining this workshop, you see you have to do it quickly. You have only tomorrow's days left, because it is NSE Academy. They cannot take any participants on last moment. It has to be done by tomorrow latest. Once you have done that, you need to send your details. What is your name, what is your email ID, and uh, how you have done the payment, maybe the reference number, etc., to this gsuri@nse.co.in. You have to send the details to this email ID, and then they will confirm your participation, right? Take water break, still likes are 125. So nice of you, Mr. Kamo. So do you want me to take a water break so that we can increase some likes? But I think without taking water break also we can work on likes. Okay, already few of you have started working on that likes. So hopefully we will get another 40-50 likes in next 5 minutes. Hopefully, let's see what happens. Okay, hopefully I've given you all the details, and if you need any other details, you can contact these people on obviously WhatsApp. If you're trying to contact now, try to contact them on WhatsApp, and otherwise tomorrow after, you can say maybe in a normal office timings, you can make a call also. Sunny Malhotra is from Option School, Garima Suri is from NSE Academy, right? You can talk to these people if you want to just clarify any details, or you want any further details. You can go to NCFM website also. There is a brochure which is there for this particular workshop on NCFM website also. If you want that, you can send a WhatsApp to Mr. Sunny Malhotra or to Garima Suri. They will send you that brochure also, which can help you in deciding whether you want to do this or not, right? And that's it. Anything you want to know, you can ask me. And okay, I've not taken any trades so far. I think not many were posted also. So I think hopefully everybody is doing very well, and all of you have already learned how to manage your trades. So which we have been discussing in last so many videos. So it's good that okay, nobody's trade is a stuck up trade, and everybody is enjoying the market. So take care of your trades. Do not take unnecessary risk. Always manage your risk by deciding when are you going to adjust, what is the adjustment, how you can reduce the risk also, right? uh, New smart edge member, hope to have a fruitful sessions. Definitely, Mr. Charanjit, we try to create sessions which are fruitful to everybody. I am here, please listen. Okay, Deepak ji, how are you? So Deepak ji is making a full blown request for likes, and I think people have listened to you also, Deepak ji. We are already having 154 likes. I think somebody posted some trade which I have totally missed. If you have any trades, please go ahead and post that. Otherwise, thanks to all of you for coming. Uh, Okay, now I'm getting some chats. What is the risk reward ratio in smart hedges, please? Oh, please keep our secrets as secrets in smart hedges, right? We try to hedge the trade as smartly as possible. That's the only thing I can reveal. Mr. Mayank Saini says in the money call or synthetic future long for covered call. That is purely your choice. You see, nothing is best. It's all very circumstantial. Sometimes you find that okay, in the money call is much better. Sometimes you find okay, simple future is much better. Sometimes you find, so there are no straightforward answers for these things, right? It all depends how market behaves and what action you take when market behave like that. Kindly make video on ratio spread adjustment. Let's see if we can do that, Mr. Tapas. And Mr. Vivek says view on Bank Nifty, bought Bank Nifty future, two lot of 21,000 to call, weekly expiry to make delta 1 week. View on for 1 week, it should touch. Mr. Vivek, you know much more than me, and we are not making, you see, any predictions where the market will go. But only request is when you're trying to make this kind of trade, we are, although the delta is one, but still, you see, the way markets move nowadays, your delta doesn't remain one for very long period, right? Within half an hour, it can really get destroyed. So I would prefer, I would not like to sell any at the money calls, and that too not more than in a ratio of 1 is to 1.5 at the most, not 1 is to 2 at all. So my advice would be that okay, you must shift your call slightly. At least one of the calls you need to take care, and in case market suddenly goes up, one of the call is will be the painful thing which you need to take care, right? Waiting for toss strategy. Okay, already have okay, some of you have already enrolled. I was given that information, so that document is already ready. We have already sent to some of our you can say some of our old what should I say, members or clients, and we are just waiting for few feedbacks. And as we promised, it will be with all of those who have already purchased it. It will be with you by Tuesday evening. In these markets where the medium-term trend is within a range or clearly low, is it not better to take naked positions linked with ICs, BCs on the call side than on the put side, Mr. MKV? Purely your choice. You see, although You find that okay, medium trend is low, but suddenly you find Dow Jones hitting all-time high and market going up. These are shallow markets, and it's very very difficult to tell which side which side the elephant will sit. Right, so it's impossible to decide that. Ajit, I already done iron condor, but not iron butterfly. I think it's not required. Both are very very similar, right? Is market movement very unusual? Definitely, Mr. Hammer, market movement is extremely unusual nowadays. Yes, it will be released on Tuesday, Mr. Gunjan. Book profit in 10,500, call July 95 is stuck, hedged with 92p. Okay, you can wait for better times, but 92p is just stopping your loss. You need to sell some call, Mr. Biju, to make some profits out of it, right? So thanks to all of you for coming. Hopefully, a few of the questions you have asked, I am able to answer. Anybody wishing to join this seminar, which is happening on Wednesday or Thursday, I have given you enough details. Otherwise, you have been given two numbers also. You can definitely make a WhatsApp call to them, and they will be responding to most of your queries. Thanks to all of you. Do not forget to like the video. Do not forget to write your comments in the comment section. Share this video to somebody whom you think it will be useful. And if you have not subscribed to this channel, please go ahead and press that subscribe button. Your subscription is very very precious to us, right? Please, can you share about Combo 2? Combo 2, there are videos, Mr. Khambar, hopefully I've pronounced it well. So you can just search our channel and write Combo 2. You will get complete details of Combo 2. It's again a paid strategy. We are a commercial organization, right? So thanks to all of you for coming, and see you tomorrow, same time at 9 p.m. Thanks.